It's the last business and trading week for the month of September, and it was a very busy September. Joining me now to talk about what has shaped the market so far and what will shape the market in the fourth quarter is investment analyst with AfriInvest, Wale Ulusi. Good morning, Wale, and thank you so much for joining me on the program.
Good morning, Harriet.
So, as we count down to the end of the month, what would you say were the issues that actually shaped the markets?
Yeah, quite a number of issues actually, and I'd like to start with the oil and gas sector. It was best performance for the month, and that's broadly driven by corn oil. Corn oil released a very impressive result for full year 2015. PAT was up over 100%. Revenue was also up, and that was driven by FX gains. I mean, the company reported a huge FX gain and, of course, subsidy gain as well. And I think investors took advantage of that and rallied on the stock. And it also had a ripple effect on all other sectors. During the week, Total, Oando, MRS, Etana were all part of the, other oil and gas players that rallied during the week. And month to date, the sector has done 8.3%. I think you mentioned that. I think there was also a ceasefire agreement between the Avengers and federal government during the period. So it was also a production booster for the sector. So investors are looking at that space. And of course, don't forget the reform in the sector earlier in May that we now saw a no subsidy regime, and that's the fact that marketers can get FX at 280 coming from the Minister of State for Petroleum. So yeah, there's a very positive outlook for this sector, I mean the oil and gas space. The consumer goods sector is also another sector that rallied. I think was up 2.7% in the month, so far month to date. And except for Guinness reported a loss actually, but other drivers in the space include the likes of Unilever, PZ, and I think Nigerian breweries also did very well. So they've been doing well. I mean, other sectors that gained include industrial goods. Earlier in the month, Danksem notified the public that there will be hiking price of cement. And this sector is an oligopolistic market where Danksem is the leader, and anything Danksem is doing, others will follow. So I think investors see that as a positive. First trading day of the month, the Danksem rallied significantly, about 5% or more. And the market adjusted, but the price, also adjusts the following day. So industrial goods sector also had that news coming in from that space. The banks didn't do quite well in the month of September because of the ripple effect of the 9 banks that were suspended late November. I think that somehow entered into the month of September, but the banks couldn't recover.
That's late August into September.
Exactly, late August into September. So the banks couldn't recover. Insurance industry, the sector has always been, the guy that's play an opposing, direction to the market. When the market is gaining, is declining. So I think that was what happened to them. So broadly speaking, the month has been driven by a lot of corporate announcements, corporate action. The likes of Guinness that reported a loss for the first time in a long time after dragging performance for about 15 quarters. Saw investors, reacting negatively to them. They have a negative of 7% week on week, despite the fact that the company still do about 50 kobo dividend just to show up share prices. So I think it was more of corporate action despite all the bad news that we have in the broader economy in the month of September.
So for the fixed income segment of the market and of course the money market, we saw largely mixed trading. But most of the days it seemed as if investors, and we had good yield of about 18% for the month of September as well. What would you say actually shaped the fixed income segment of the market?
I think the fixed income market, what is happening there is broadly shaped by the level of liquidity. We saw a lot of trading days opening with negative balance in terms of system liquidity, and there's been a lot of mop-up. CBN has been doing a lot of mop-up throughout the month of September, just to contain liquidity in the system. And we've seen OBB and overnight trade rallied above 30% and down. The effect of FAC allocation last week actually moderated that a bit. We also saw a lot of primary markets auction, both for bond, the mid-month weekly bond auction came in, and of course the PMA for T-bills also came in, and of course that affected liquidity in the system. So for the fixed income space of the market, I think it's been more of liquidity in the system and investors taking advantage of the very attractive yield that we've seen in that space. Last week, the MPC held all rates constant. Maybe that will have adjusted a bit if rates have been hike according to reduce, given a number of calls coming from a lot of analysts that maybe it's time to actually reduce rate. But since the MPC kept it stable, we saw a bullish, the bond market actually was bullish last week. So I think in the absence of that, the fixed income market has been broadly driven by liquidity in the system.
Well, Wale, you actually alluded to it that the CBN actually did very aggressive mop-up in the month of September. I think in the last 3 quarters, this month actually saw the most aggressive from the CBN. Now, the regulator plans to borrow 1.77 billion naira via treasury bills in the last 3 months of the year. How much of an impact will this have on the money markets in the fourth quarter?
Well, I think it's not going to be different from what we've seen so far in the year. The level of mop-up that we've seen is suggesting that the system is actually very liquid. That's why CBN will continue to mop up. If the system is not that liquid, the CBN will not continue to try to contain liquidity. Probably that's just to make sure that the banks are not overdoing it, and to continue to guide the fact that they are tightening, because at 14% MPR, that's actually a very strict monetary policy, I would like to say. But I don't think it will be different from what we've had in the last 3 months so far, because the CBN has continued to mop up, and most of the PMA auction that have been coming, they've been oversubscribed. And the one they did on Friday, I think it was oversubscribed by more than 2.5 times, compared to about 50 billion that was supposed to be offered. Eventually, they allotted over 100 billion. So because, investors has so much to ask for, probably because it was issued at 18.5% compared to the others, the other rate that was at 18% versus 50% for that. It was allotted, only 47 billion was allotted. So the one with the higher rate saw an oversubscription compared to the others, and they were all issued. So I think nothing is going to change in that space. We are going to continue to see a lot of oversubscription from investors, because the government actually needs a lot of money at the moment. So I think they'll continue to borrow.
All right, so quickly comment on this, if you will, from Osei Brown. He says, what options for those locked in on long-term bonds? What are the options? Well,
for long-term bond, I think we've seen more activity at the shorter end of the curve in the bond market than in the longer end of the curve. And I think that's broadly looking at the outlook for the economy. And that's related to what S&P did last week or 2 weeks ago, when they downgraded Nigeria for, basically the fact that the economy is receding and there's a lot of production distortion coming from Niger Delta. The outlook on the economy in terms of our creditworthiness is not as strong as it used to be, so they downgraded us. So investors are more comfortable with at the shorter end of the curve compared to at the longer end. But I think the yield there is going to be more attractive, because
that's if you can stand the risk anyway.
If you can stand the risk. So for investors that are looking at the longer end of the curve, then you must be able to, look beyond what is happening in the economy in the short run.
So just give us a sense of what the size of liquidity is that is left in the market.
Well, as of Friday, I think post the FAC allocation, the market is in a surplus of over 93 billion. And that's because of the aggressive mop-up, actually. About 6 months earlier, the market has actually have over 500 billion. And CBN guided the fact that they will be doing an aggressive mop-up. And what we've seen in the last 3 months has actually been a testimony to that. They've tried to show it off a lot. Last Monday, it was a deficit opening balance for the market. So while the CBN continues to aggressively mop up, the banks can also complain that they don't have enough liquidity. So what for you will be a balance for all the parties? Well, I think for the banks, they don't really have much choice. The CBN is the policy maker, and it depends on what they want to do. If they want the system to be tight, they will continue to mop up. If they want to ease it, then they can, try to reduce that.
So with all these planned mop-ups, what's your expectation on the yield curve for the fourth quarter?
Well, for the fourth quarter, really, except there are fundamental changes in the economy, I don't think anything is going to change. If NPR will remain at 14%, for example, and CBN is not going to come down, and CBN is going to continue to mop up aggressively, and you know, unlike what we heard earlier, Niger Delta Avengers are saying they are seizing fire, but over the weekend we saw a number of bomb blasts. So that's saying that the outlook is still poor, the risk factors are still there, coming from the federal government and the fiscal policy managers. We are yet to see a concrete, communication for them. I think the latest one coming from the Minister of Finance is that we are not sure when a recession will be over. I think that's a little depressing for the public. So these are issues that investors will be worried about, and it will continue to affect the yield curve.
Okay, so that's what you feel will also be driving investors' sentiments in the fixed income space for the rest of the year. Definitely,
the level of risk in the system will continue to drive investment in that space, because investors will continue to put a premium on price of bond, depending on the level of risk in the system. If the risks are higher, they had more premium.
So, bullish, British, bearish. What do you expect for the rest of the year?
Well, for the rest of the year, except there are positive communications, really, the outlook looks bearish. For the equities markets, we are in a negative of 1.4%. That means from January to now, nothing significant has changed, and the equities markets index is a barometer of how well the economy is doing. So if nothing significant has happened in the economy from January to date in terms of policy, in terms of changing the direction or the trajectory of growth, then maybe the negative forecast that a lot of analysts have suggested is what we are going to have.
Wale, thank you so much for coming on the program and sharing your perspectives.
Thank you for having me, Harriet. Good morning.